Let's just get into it. So generally the first thing I do is I pop up the web page, scan my email real quick, but that's not super important. I go to Zero Hedge and I scroll through the headlines to see if there's anything interesting going on that happened overnight or maybe that I need to be concerned about. Zero Hedge is an interesting website. It's mostly bearish. All they talk about is how everything is going to collapse. Now, I don't actually hold that perspective. I'm not a perma bear. I do think we're headed for a collapse, but that is actually why I hold stocks, because it's going to be the currency that's going to collapse. And I would rather hold something rather than nothing. And so regardless of what happens in the future, it's highly likely that companies that are profitable and that are growing are going to survive. You know, if you take a look at what happened in Weimar, Germany as an example, Krupp is still around. Company's been around since the 1800s. It survived World War I. It survived World War II. It survived the Nazis. Company is still in business. And that, you know, they're not the only one. Mercedes-Benz. So had you been an owner of those companies all the way through those changing turmoil events, your assets would have been protected. So that's why I'm such a big fan of stocks. I mean, it's better to own a portion of something rather than absolute nothing. Okay, so we're going to cruise through Zero Hedge, and if there's nothing exciting going on there, I go to Stock Strategy Circle and see if there's any maintenance I need to do real quick. Now, I do that because it's my group that I run. See if there's any messages I need to return. And if there's not, then I close that window down, close the window down, and I open up my TradingView. Now, I have TradingView set up on 4 screens. You don't necessarily need to do that. If you have a free account with TradingView, they will allow you to use currently, I think, one screen and have one chart on it. And you can go through and do more or less exactly what I do with just one screen. And you can do it relatively quickly. So the first thing that I do is I get a preview on what the market is actually doing. And I do that not by checking the actual indexes. I watch the ETFs that trade on those indexes. And so the ETFs I scan through relatively quickly is I use SPY, which is the Spider S&P 500 ETF, and I check that. As you can see, I have past annotations on this chart that are giving me an idea of where the market has been and where it's going. I'm a big fan of trend lines. I don't have any on this chart, but let's put some on. So if I see any activity that I want to make note of, we'll go in there and we'll put that on there. I also want you to notice that my actual charts are relatively indicator free. I've been doing this a long time. I've 30 years. And what I have seen is that most indicators are, baloney. There are some things that I will look at when I'm about to place a trade, but when I'm trying to figure out what is going on in the market, I like to have clean charts. I am a big fan of the volume profile because, as you can see at a glance, the volume profile shows you where the price activity is. It's a great tool for anticipating support and resistance. So at a glance, it tells you everything more or less you need to know. So from SPY, we go to DIA. DIA is the Spider Dow Jones Industrial Average ETF. And then I look at the Qs, which is NASDAQ, QQQ. I like to see what's going on there. As you can see, the Qs currently, let's go ahead and put in this resistance line. The Qs are currently sitting right above their short-term resistance line, and they have support. Qs is more or less in a triangle formation right now. In fact, this formation looks pretty solid. We have declining volume going through it. Now, what does that mean? That means something most likely is about to happen. We're probably going to see that take place next week. The way the Qs is acting, actually the way the market is acting in general, a lot of people are talking about there's going to be a collapse. I don't believe that. I think we're headed into a massive bull market explosion for reasons that are going to be caused by government spending. Okay, when you hear people say that the stock market is in a bubble and that these stocks are overvalued, that depends on what you're valuing them against. If you're valuing stocks against the dollar, they're not overvalued. And why do I say that? Because the government is printing so much money, they are essentially destroying the value of the currency. And that's true for all governments. It's not just the United States doing it. It actually turns out that the United States is the cleanest dirty shirt in the laundry, but we're still doing it. I put up a video a couple days ago you should look at, talking about the price of gold. Maybe I'll link it at the end of this video, versus U.S. government debt. And I'm not going to go over that again here, but you should take a look at it so you'll understand what's going on. Then I look at VONG. Now, VONG is a growth stock ETF based on the Russell 1000. And so why do I look at that? It's my view that the best stocks to hold in any market conditions are going to be growth stocks. Why? Because a company that has growing revenues and growing profits is almost always a safer bet financial-wise than a company that is already established. That's where the excitement is, frankly. And if you look up the statistics, you'll see that growth stocks have outperformed the rest of the market literally forever. There's almost very few market conditions where growth stocks don't do well in. Therefore, I want to place most of my trades based on what's going on with the growth stocks. Now, under current market conditions, the growth stock chart of the VONG looks a lot like the QQQ. And well, that's because right now, most of the focus is on technology, and the NASDAQ is a very technology heavy index. That's not what I'm worried about. I don't care what industry is doing what. What I care about is that the company makes money and that people believe they're going to continue to make money in the future. And that's more or less what your growth stock indexes are all about. And then there's VTI. Now, VTI is a Vanguard Total Stock Market Index. And I use this really as a gauge to whether or not we are in a bull or bear market. You know, you might have a bad day in the Dow and you might have a bad day in the Qs, but the reality of it is you want to know what's going on in the whole market, in the general market. And remember, a rising tide lifts all boats. And so typically you only want to trade either after a pullback has happened or when you're in the middle of a bull market. When you're in a bear market, unless you're trading short, really you should move your money to the side and just wait for things to settle. I almost always exclusively trade breakout, which means even in a bear market, I'm only looking to buy stocks that are strong to begin with. If you follow that methodology, it's going to be pretty easy for you to stay in the top performing stocks. Then the only thing you have to worry about is weeding out false breakouts. Okay, after I've done that, I go ahead and I log into my account. What is so cool about TradingView is that they are set up with several different stock brokerage companies, and I trade lots of small positions in many stocks, and I do that because I am extremely risk averse. I don't really like to risk more than $200 on any one position. Now, that depends on your account size. I recommend that you never risk more than 1 to 2% of your account size in any one position. And I can go into how to determine what that is. It's not 1 or 2% of your account in the trade. It's 1 or 2% risk. I don't invest in stocks. I buy stocks as they go up. I sell them when they show weakness. The vast majority of the time, I always have cash on the side because the minute a stock shows weakness, I get out of it. This is a speculative trading account, and I am trying to beat the market with this account, and I'm only taking calculated risks. The other thing I do with this account is I have this account linked to the Stock Strategy Circle. And so when I see breakouts occur or trades occur, I go ahead and I place them in the account, and then that alerts my subscribers that there is a stock that fits the criteria that I trade that has activity on it right away. And so members can get linked to that. And it all happens in the background. When I open up my trading account, the first thing I do is I sort my holdings based on profit and loss. And I start off looking at the losers first because I want to find out if I have a position that is bleeding my account. Okay, now that I'm in my account, what we're going to do is we're going to add an indicator onto the chart. And this indicator is what I use to pay attention to where potential breakouts and where my stop losses should be. You can find this indicator on TradingView if you just type in swing, and then it will pop up. On breakouts, I use a 3-day swing, and for stop losses, I will typically use a 5-day swing. Now, why is that? Well, because the market has a bullish bias, and I don't want to get shaken out of trades due to volatility. So you don't want to have your stop loss too close. Ideally, what you want to do is you want to set your position size so that your dollar risk fits the stock. An example of how to do that. So this particular stock, Nuvalent, I'm down 5% on this one. Now, why am I not pushing the panic button? 5%, oh, that's horrible. Not really, actually. Why? Because I adjust my position size on market volatility. So before I entered this position, I went down here, which is where I think your stop loss should be, somewhere below this, below the 65 level. And I took a look at the fill, which was going to be around 85 or so. And so there's $20 worth of risk in this stock. So if you buy one share, you're looking at $20 worth of risk on one share. If you only want to risk 200 per position, that means you can buy 10 shares. So the percentage amount that this thing goes up and down is not really relevant to me, because regardless of what that says, I only have $200 worth of risk in the stock because I'm only going to buy 10 shares at a time. Now, this stock is not something I'm going to worry about, even though it's down 5%, because there is plenty of room in this thing based on my position size. So we're going to move on. Okay, Motorola Solutions. This one is down 0.95% from my entry level. Now, on Motorola, look at this thing. This is such a strong stock. It almost never pulls back, at least not for the last year or so since we've been watching it. This was a trade alert that I put on the other day. And with this one here, right, this is a $428 stock. If you were looking at figuring out a way to adjust your position size based on volatility, in my case, I would want to have maybe 4 shares of this. If this thing were to drop down, below here, I would probably get out anyway. But if that were to happen, because I adjust my trade position based on account volatility, I'm still only risking $200. You buy an amount of shares that corresponds to the volatility in the market. When you do that and you control risk on the downside, it makes it really easy for you to, number one, account for risk in your account, but also to help minimize any losses you're going to take on any one position, right? So this one is down 4%. This one is down 1%, right? 1%, same thing, Cinemark Holdings. Now, some of these positions I actually rolled over from another account. I've been slowly moving my accounts over into this one account to make it easier for me to manage the stock strategy circle. So this particular position, I actually recommended the breakout here around 22 or so. So even though I'm showing a loss in this current account, that's because I actually rolled the stock over. This was actually purchased down here. See the circle on the chart that was already there. I believe I did another video about this a while back that you could probably find if I posted it. Okay, JEPI, this is an ETF that I stay in just for the dividend income. Let's say you have fees associated with your trading account every month. In my case, it's data fees. One of the things you can do is you can just get into one of these ETFs that pays a monthly dividend, figure how much your data fees are going to be, and then buy a position in this stock and just leave it in there, and then the dividends on your stock will pay for your data fees, especially if it issues monthly dividends like JPI. RYLD, this is another one I'm holding. Now, the other thing you want to understand is that these current numbers are actually based on the bid at the time the market closed. So even though this is showing that it's down by 0.14%, this position was actually profitable as of Friday. And that's it. We are now out of the weeds. So I'm only showing 4 positions that are at a little bit of a percentage point loss, and I'm not worried about any of those. I have another 30 positions in the account that are profitable, and of the positions that are at a loss, those are ones that we practically just entered in the other day, and sometimes they bounce around for a little bit before they start to show profits. Other times they don't, and I just close them out. So here's Newmark Group. We can go through that. Now I'm going to pick this up a little bit because this video is already running longer than I want. Bright Horizons Family Group. So what you want to do is you just want to go through and look at your positions, beginning with the losses first, and double check and see if there's anything that you might need to close out, anything you want to sell this morning. If you're not doing a YouTube video like I am, here's Neonode. This one is up 31% from the time I issued the trade alert. So there you go. How many 31% wins do you have to get to make up for these little 0.5% losses? Not that many, frankly, and that's the whole point. That's why you trade leading stocks that are breaking out from congestion patterns, and you trail your stop loss up as you go. KNF, this was a trade alert that was issued just a couple days ago. I did a video about that one. This one right now is showing that it's down 26%. But again, that's just because that's based off the bid. As you can see, it's actually $3 to the positive. This one should actually show a 2% gain, but whatever. This is a quirk. This is why I probably should be doing this video on Monday morning instead of Saturday morning, but whatever. Protagonist Therapeutics, bought it at 43. It's at 47. That was another one that had a trade alert on it. TPG, we bought at 50. It's now at 56, right? We're in a raging bull market right now. And anybody who tells you anything otherwise is just insane. They do not understand what's going on fundamentally with the market. They may be right about the economy, but guess what? The stock market doesn't have anything to do with the economy. That's all myths. It's all baloney. The stock market does good or bad based on what investors think is going to go on with stocks. Tying the stock market to economic activity is a fool's errand. It literally does not work. The only thing that matters is what an individual stock is doing. PennyMac Financial from 108 to 115 in about 2 days. FRPT, this one's up just a little bit. AXON, this one is up quite a bit from the time I issued the trade alert on it. But it's a more expensive stock, right? So we're showing a 3% gain on this one. I would do the math, but I'm not going to. Sezzle is another recent trade alert. It is up a little bit, 1%. DR Horton consolidated quite a bit. Again, it's up a little bit, about 3-4%. The screen's showing 2%, but that's based on the bid when the market closed. Cintas Corporation, I have a whole video about this one and what's going on with it. And it's up 3.5% roughly since it was recommended. And then Fair Isaac. Fair Isaac is a high value stock that we recommended actually on a bounce before it actually broke out. Right now, look at this one. This is one of the things that you got to understand the quirks of your own system. I actually don't have a loss in Fair Isaac. This minus 4.85% is based on the bid of the stock after hours when the market was closed. We bought it right here at 1755. We're up $100, per share on this particular position. Okay, once I've run through all of that, and this actually only takes about 2 minutes, right? The only reason it's taken me this long is because I'm talking to you and explaining what I'm doing. Okay, so after all of that, the very next thing that we do is we pull up the watch list. What I do periodically, and this is for members of Stock Strategy Circle, and I only publish this on the website, but it updates automatically when I do it. On Sunday night, I go through the market and I flag different stocks that I think meet my criteria, which is it's got to be a market leader. It's got to be in some kind of consolidation. It needs to be within 5 to 10% of its 52-week high. And then I have some other criteria that I use that I can't really explain. It's just experience. I've been doing it a long time. I look at a stock and I think, would I trade this? If the answer is no, I don't put it on a watch list. Anyway, what's so cool about TradingView is I create the watch list and then I post it on the website with a link, and you can click on the link and it will pull you right into the watch list. And then you can go down that watch list and just look at it on your charts. And so I typically sort the watch list based on float. The reason I do that is because when I am allocating money, I only have so much money to invest, just like you. And so I want to put my money in the rarest investment. Stocks that have low floats, if the market decides to aggressively buy them, there's not a lot of supply out there, which means the prices tend to move quicker. You will find that stocks that have 50 million or less shares available in the float tend to be the ones that give you the highest return the fastest. This is a statistic that I got from Investors Business Daily. I've been following this for years and it does tend to work. I'll probably get a lot of thumbs downs, on this video for saying that, because for some whatever reason, whenever I say I sort by float, I get thumbs down. Now, the lowest float stock on the watch list right now is NVR. Now, NVR probably is going to break out on Monday. Most likely you'll see that I issue a trade alert for this one. So there, you just got a free trade alert and you're not even a member. Then the next one is Sezzle. We're already in that. We bought that one and it's It's already up on the breakout, like almost a full percent. U-Haul broke out on Friday. It broke out after I did my market search, so I don't think we put a trade alert on U-Haul. Probably that's something that's going to come on Monday. Look at this, NCGO Corp. This is another low float stock that is just, just a madman. So as of right now, there's 138 items that are on the watch list, and many of these items were already in Limbach Holdings. Excuse me, I'm fucking dying of COVID. If you watch any of my other videos, you will see various annotations on the chart. When you see those annotations in the background, that tells you that's a stock that, I've been watching a while. I like to put annotations on it as I see things, because it's a good reminder for me of what I thought at the time something was going on. And so I will go through all of the stocks and we'll just make a quick determination if there's anything that I might want to buy. Freight Car America, I'm kind of upset that I missed this one. This stock broke out while I was in the middle of rolling over some accounts, and it takes a while to move money around. This is one that I would have liked to have purchased in here, believe it or not. There's support right here. I'm not going to get into that. That's not what this video is about. So what I'm doing right now is I'm going through and I'm looking for potential entry points. Piper Sandler looks like a good one maybe for Monday. So I'm going to put a annotation on this so I can remember what it is I was looking at. And these two things are shakeouts. If you take the 5-star trading course, I explain that. That's a whole hour video in and of itself. What's interesting here is this declining volume that we had going on for the last 2 months. Piper Sandler is probably going to break out huge. It's not there yet. I might issue a trade alert for that one on Monday. And that's it. I page through this whole list and I look for things. Technoglass. Oh, look at that. Technoglass already broke out. I actually was holding Technoglass in another account, which I bought down here, but right, that's not relevant because I closed that account, so I don't have the position, which cost me, right? I should have just left it alone. Fair Isaac, Interdigital. This is interesting, right? There's that. There's this. That's in the wrong place. Let's fix this. They used to call this a megaphone pattern. I don't know if they call it anything today, but when they're small, they have a tendency to be bullish. When they're large, they have a tendency to be distribution. So we'll see. Now, why is this stock on the list? It's on the list because it's already a top performing stock. So it's highly likely that this is not going to be a distribution pattern, but it's not viable today. Castle Biosciences, this one had a breakout Thursday. It held above the support. Maybe we'll issue a buy alert on it, maybe not. Cohen Steers, I think we issued a buy alert on this one a while back, but it was in another account that I have. It's holding up. Now, again, if I'm not doing a video while I'm doing this, this happens really, really fast. I literally page through the charts just like this, and I'm looking. Boot Barn, Lennox International, this looks pretty strong. Now, if you don't feel that you have the time to do this because your life is too busy or whatever, then that's the whole point of the stock strategy circle. As I go through and I'm looking at these, if I place a trade in something, you get the trade alert right away. It's a huge time saver. Then the only thing you have to do, really, because there's no way I can tell you what to do, because I don't know how big your account is, right? I can give you the principle behind it. Don't risk more than 1 to 2% of your account on any one trade, okay? Then you have to go in and take the principles that I teach to figure out how much of any one position you should get for your account size, because the alerts are going to have all different numbers on them, and those numbers don't apply to you. If I buy 1 share in something and 100 shares in something else, that literally has nothing to do with what you should be doing in your account. I issue those trade alerts out of a live account, and many times I buy just 1 a share, and that's based on the fact that I already have 50 other positions in the account, and I just want people to know that that stock is active that day. Right, here's another breakout, Mercado Libre. I was holding this in another account. I closed the position out in order to transfer it. This stock is really prone to making, big moves, consolidating, and then clearing the aisles and then going up again. Fresh Pet. I did a video about Fresh Pet. Wait a minute, that's not Fresh Pet. That should have been Fresh Pet. Did we already look at Fresh Pet? Oh, yeah, there's Fresh Pet. I think I skipped right through Fresh Pet. Didn't even talk about it. Anyway, that's the morning routine. I go through these 130 stocks. I look for things that broke out, up 6% on PennyMac. First Advantage, this one broke out on Friday. And that is basically the routine. And I do that every single day, almost. But you don't have to. The hardest part about investing is figuring out from the thousands of stocks that are available at any one time period where is the best place to put your money. And that's a decision that you have to make because it's your money. But what I do is I have a methodology that I've developed over the years, and that helps me relatively quickly weed things out to get the right kinds of stocks on the list. And then it's a question of, are we in a bear market or a sideways market? Is the stock looking right? And do I have money available to trade it? Right? Those are your four variables. I can't control how big your account is, so I can't tell you what you should invest in. All I can show you is what I'm looking at and what I'm doing. And if you want to see the different stocks that are actually being allocated based on these kind of trading criteria, then that's what Stock Strategy Circle is for. Hopefully you learned something from this video, but the morning routine is not really all that difficult. Maybe I will do one live in the market, but this video has already run too long. Anyway, this is Painless with Stock Strategy Circle. I hope you enjoyed this video. Have a good weekend.